Welcome, everybody, to our Sellers Panel. We are joined today by Constance Anderson of Member XP. Member XP is the largest provider of direct credit union member feedback via quantitative and qualitative research in the United States and provides actionable research to credit unions in their pursuit of brand differentiation. Constance sold her company in July of 2019. Kevin Kelly of Altvia, founded in 2006. Altvia provides a SaaS platform as a trusted provider to over 40,000 investors and hundreds of private capital market firms. Then we have Jay Fiske of Maestrosoft. Maestrosoft offers the most comprehensive suite of event management solutions for over 3,000 not-for-profit consumers. Maestrosoft's industry-leading event management software, online management tools, and credit card processing tools have helped to raise over $5 billion by bringing fundraising to a new level of ease and accessibility. Jay also sold his company in July of 2020. And finally, we also have Domenico Crapanzano of Fing. Fing is the global leader in device recognition technology for IoT. Founded in 2009, with 40 million consumer downloads of its network scanner app and 10 million new devices cataloged every month, Fing device recognition and fingerprinting technologies give visibility over the entire digital environment, from consumers and industrial IoT to OT. The most recent sale of the panel, Domenico sold his company in October 2020. Let's dive right in. Why did you go through the M&A process? Was there a specific reason, a motivation? Let's start with you, Constance.
I really started my business because I wanted more control of my life and my time. Now, anybody who has had a successful business knows that that's probably not what's going to happen. In fact, but at the time, I realized we only have so many hours on this planet. I had been working for some bigger companies and I working 60-hour work weeks, and I thought I could get more control, not just time, but just, authority and so on. And I think that's true for a lot of women entrepreneurs in particular, right? We want more life balance. We're trying to juggle a million things. So I started my company when I was 39, right? And left the world of having bosses and going to work. And, I've worked from home ever since. But ironically, like I said, that's the same way I knew it was time to leave the business. A personal reason, I just didn't have life balance anymore. The company was successful and I'm grateful for that. But, I was spending all my time. I was really consumed by the business. And that's how I knew it was time to sell. Now, if I had been younger, I may have thought differently. I'm over 60 now. And so for me in this decade, life balance is probably the most important value for me.
Kevin, how about you?
Probably the biggest driver was that in, call it kind of like the 2016, 17, 18 timeframe, there's starting to be a lot of consolidation happening in our marketplace, a lot of shifting sands in our marketplace. I mentioned some of our underlying technology has grown and changed quite a bit. And so there was just a fundamental shift that we saw coming. We have had an amazing opportunity, I think, to grow some longstanding client relationships with some folks that have been with us for a long time. But I think that as far as going out and looking at new clients, I think the landscape had changed quite a bit. And we felt like there were some opportunities for us to really accelerate some product innovation and just deliver more and better products in the marketplace. We also felt like there was just a lot of movement going on. And we had a lot of inbound interest from other strategic players in the space. So in some cases, maybe some competitors, some folks that were sort of adjacent to us, and as well as just kind of pure, kind of financial buyers. So when we saw enough kind of consolidation happening in the marketplace, we decided that it was a good idea to maybe get a little bit more structured in how we were responding to what was going on in the marketplace around us.
Great. Jay, what about you?
Well, I think ours is more evolutionary than revolutionary, in the sense that when we started the company in 1995, I figured it was a 3 or 4 or 5 year lifespan. It was going to, grow, and then someone was going to come along and, buy it. And then I would move on and do something else. I never expected that it'd be a 25-year process. I will say this, early on, around 2002, 2003, 4, something like that, we were approached by Corum. At that time, we were a 6-7-year-old company. And we started getting asked, do you think you ever someday might want to sell your company? And from that point on, I said, yeah, I'd be ready to exit anytime someone wants to come along and buy it. I like being an auctioneer, but I prefer to not have to be running a software company too, And so Corum stayed with us. I mean, we've got a 17-year relationship with them. They were always very nice. They never gave up on us. I mean, literally, they stuck with us for 17 years and always got invited, always got included. We always appreciated that. We were just never right. Our company went through some serious troubled times over the last 20 years, and we were never really right for market. And the last couple of years, we felt it was just time.
Thanks, Jay. And last but not least, Domenico, what was your reason for going through the M&A process?
I bought into this company called Fing, which was essentially 3 engineers with an app and about 20 million downloads and no revenues. And I thought I could make a business out of it. So I bought the company and started spending a lot of time and money trying to develop it. We got to the point where we had 30 people and tried to develop a business out of it in data mining, the data that we had. I think we had a successful brand. And we were working on our business model because the problem is, how do we monetize all the information that we had? And I got to the point where I took the company in break even finally after 4 years, and I realized I really needed significant investment to take it to the next level. I think we had ended like phase 1 of the company, and a little bit I had too many things going on in my life at the time. A little bit I had a lot of interest from outside. And so, as I said, I had an interest before, and I tried to follow up myself, but nothing came out of it. So I contacted Corum, mostly just to understand what I had in my hands and kind of mark to market the assets that I had and what I had built. So I think it was the right time. It was also, everybody stayed in the company. I was the only one who left, in fact. It was the right thing for the company, for the people, for me, and it was a really good outcome.
What surprised you most about the M&A process? Any mistakes that you made along the way? Let's go to Domenico first.
Because the biggest challenge was time. It's a very time-consuming process. So we needed to really work on the story and how we were doing a number of things. We had a number of assets. People were looking at us for different reasons. So in fact, probably the most useful thing was for me to those initial sessions with Corum to kind of iron out how to present the story. We had a bunch of interest. And then, it all kicks in. We started the process in January, and we had our first LOI in July, and we had an agreed deal 3 weeks later. But those 3 weeks in July were probably, there's actually fun. I would say it's very time consuming, so it's a job which you need to reconcile with all your other jobs of running a company, and you don't know whether this goes anywhere or not, and it's a big job.
Thanks, Domenico. And how about you, Jay?
Well, the negotiating process was a little bit interesting because everybody feels that their company is worth more than the buyer. The buyer always feels they're buying a company for less, and the seller always feels their company's worth more. So the back and forth on the final price and what would be included in that price, that kind of surprised me.
Great. Kevin?
We finally closed our transaction at the end of May. And I remember thinking that, there was times like in April where, we had gone through a bunch of materials and it's like, it feels like, we're almost there. Or, you start thinking about it, it's like, what more could they ask? And what we found in that last, 6 weeks was like, wow, there's a lot more to ask. There was a lot more to ask even in the last 6 days. So it was kind of like this bottomless pit of questions that could be asked and information that needed to be provided and things like that. So much happens even in that last, kind of 3-4 weeks. Like you think you're through everything, and it's like, gosh, there's a ton more stuff to do and a lot of ways to look at things. It was kind of amazing when it was all done.
And Constance, how about you? Any surprises along the way?
Yeah, well, in terms of my time, I have to say, I really didn't know how many leads they were going to bring me. I think that was part of the time factor. I really didn't realize how many presentations and, sales presentations and follow-ups I would be doing. That's good, but I do think that was a surprise to me.
So most importantly, what advice do you have for the tech CEOs in our audience today who are considering M&A? Kevin, let's start with you.
The thing is that everything that you've done in your business up to the point of going to market, you're going to have to answer to. So you're going to have to get comfortable with the fact that you made mistakes along the way. You just have to kind of be okay with that. And I think in our case, I think that's kind of been part of our culture, is to be transparent. And when we do something well, talk about it. And when we don't do something well. But I think if we had tried to smooth over rough spots and things like that, that probably would have been a big mistake.
Thanks, Kevin. Domenico?
I would say patience to do something at the right when it makes sense for the firm. And the other one is really taking time for preparation on telling the story and looking at the numbers, on presenting, on really I would say prepare. You got to make sure you know your stuff when it starts, because you can't sell air, and it gets pretty real pretty quickly, and it's very time consuming, so you don't want to waste time. That's for sure.
Awesome. Constance?
I got my executive team engaged. I mean, that is without saying, hey, I've got a buyer tomorrow I need to do a presentation for. Can you guys write a strategic plan? We didn't do it that way. We had all said for a long time we needed it. So I got them involved, and they each took a piece, of the plan that they were familiar with. And so they really helped me out, I have to say. That is something I don't think a founder or a CEO has to do by themselves, nor should they, right? All of the employees are with the acquiring company. And so it was really important that if I did sell, they did know the strategic plan. So that might be my advice, is to get key players involved.
Great. And Jay, what about you? Any advice?
There are people that are professionals for a reason. And I got hired as a professional auctioneer because I'm good at it. And the people that are good at M&A, they ought to be allowed to do the M&A. That's what they do for a living. So my suggestion to anybody looking at doing an exit is think of what you're really, really good at, and then hire someone who's really, really good at what you want to accomplish, and let them do it.
Well, finally, what's life like now after the deal?
My goal right now, my brother said one time to me on New Year's, I have another brother who's very goal-oriented. He's a business owner. And he said to my other brother, who's also a business owner, he said, do you have any goals for the new year? And my brother said, my goal is to have no goals. And, I kind of laughed. And that's how I feel right now. I've been so goal-oriented most of my life that I'm kind of gotten into a place where I'm just more interested in being. I think that if I were going to do something else, though, after COVID, and we have a little more freedom, I don't think it would be for profit. But if there was something not for profit that I could get involved in, maybe working with women entrepreneurs, I think I would find that really fulfilling.
Well, it's a really cool feeling. Like my day-to-day hasn't changed that much in terms of I'm sticking with the company. I'm not transitioning out. Our leadership team is intact. One of the big things that Bow River was investing in was just the team that we've already built. Now, we've added a lot to that leadership team, and some people's responsibilities are going to shift around and stuff. But for most of us, we're doing the job that we've always been doing now. We've got some resources to do it. It kind of feels like we hit base camp a little bit. Like we didn't hit the plateau, or we didn't hit the summit of what we were trying to do, but we've hit a nice spot where you can kind of catch your breath a little bit. We've got tremendous resources now to go, succeed and do what we want to do, which is ultimately, change how private capital markets works.
I'm just much less stressed, to be honest with you, knowing that the company has been acquired by a good parent company. All the administrative things are being handled and the financial things are being handled. I can focus. So I'm enjoying work. I'm working earlier and loving it.
Thanks again to Constance, Kevin, Domenico, and Jay for being part of today's Sellers Panel. For the tech CEOs and founders listening, if you'd like to hear more stories from entrepreneurs who have sold their companies through a formal M&A process, please check out the Tech Exits podcast, produced by the team at the WFS. Our latest episode features CEO Tony Pappas, as he and I discuss the sale of construction tech company ExactTime. You can find more episodes by typing Tech Exits into Apple Podcasts, Spotify, or wherever you stream your podcasts from. You can also find this and other content at WFS.com. Thanks again to Corum for inviting me today.